Hey traders, this is Blake Morrow with Forex Analytics, and you're listening to the week ahead video for June 12th, 2022. What a crazy week. We had the dollar ripped higher post ECB meeting, then following the inflation data. And I have a treat for you this week. Gregor Horvat, who is our in-house Elliott Wave analyst. He's going to be actually giving you the week ahead video this week, because having a good understanding of what the next Elliott Wave count is in the current marketplace is going to give you a good idea of how far this move can go and where it might reverse. So make sure you check out the video here in just a few minutes. But I have to mention this. If you want to get all of our team's analysis, come join us. It's only $1 for 10 days to try it out. You get the Forex Analytics system. We actually updated, if you haven't seen it, our new website is updated, revamped. We also updated our mobile app that you get included even when you're trying out Forex Analytics. And then I also have to mention, if you haven't tried the Trader Funding Program, if you want to learn how to trade our money and not put your own money at risk, try the Trader Funding Program. You have to take an assessment. It isn't a paid assessment, but you have to trade in a demonstration account or a paper trading account and make a 10% return without losing more than 5% on a trailing drawdown basis. If you think you can do that with an unlimited time and being able to have the Forex Analytics tools at your disposal, check out the Trader Funding Program. If you want a quick 2-minute video, scroll to the bottom of this page, and you can see that quick 2-minute video on the Trader Funding Program. So we have an exciting week ahead video for you this week. Stick around for Gregor Horvat, Elliott Wave Extraordinaire.
Hello traders, hello everyone, my name is Gregor Horvat and welcome to our week ahead video for Forex Analytics. So I will take the stage this weekend for you since Blake is away for some personal stuff. So before we go to the analysis, let me just remind you, if you want to become the client of our services, you have this trial available for $1 for 10 days. Also, you have this trader funding program available to apply. So if you are profitable, if you don't have maybe enough funds, or that you just simply don't want to risk your money, you can apply for this program, and if you will be successful, you will be funded on a live trading account where you can collect profits. So as you know, we have a very busy week with central bank decisions, which will obviously have an impact on the market flows. So we have Fed, we have Bank of England, we have Bank of Switzerland, and we also have Bank of Japan decisions. As you know, firstly, we have the Fed with expectations of a 50% basis point increase. So speculators recently turned bullish on the US dollar because they are expecting hawkish Fed, especially after latest strong US inflation data. So if we look firstly at the 10-year US notes, as you know, yields are coming to the upside. Obviously, on the opposite side of these notes are trading lower at the moment, but from an Elliott Wave perspective, what we see here is very extended and strong drop. So we still assume that this can be an impulse now in final stages. You are seeing prices in a fifth wave. Also, what is very common for a fifth wave is that you will see divergence at the same time on the RSI. So if you think you are in a fifth wave, well, you look at look at the RSI or the MACD, and if there is a divergence, then there's another confirmation that yes, that this can be a fifth wave, and divergence usually occurs at the end of the trends. Also, price will normally in a fifth wave make a very similar distance compared to wave one, especially when you have this wave 3 extended, like in our case. So yes, US yields are trading higher, US dollar is bullish, but we should be careful. I still think that this could be some late stages before the market could potentially stabilize during the summer. Now let's take a look on dollar index. So on dollar index, we are bullish, and of course I will be looking for more upside, but I still think that this consolidation may not be done so easily. Okay, so I'm aware of this wave 4 to be a little bit more complex. If you're looking here at the daily chart, what I see here is just very one sharp drop from the highs. Okay, but the wave 4 is usually much more complex, so I am aware of potential maybe even irregular formation here, but the idea is that this is wave A, wave B, and now I'm waiting still on a wave C. We are now probably around this 61.8% here, a little bit higher after this data on Friday. So 104 is still key resistance. Of course, it's a very sharp rally, very hard to fight here. But if we suddenly see a drop next week, let's say back below 103, then I think that this wave C could really be in the card. So the idea is that we are definitely bullish on the longer term, but I'm aware of this potentially more complex corrections here, as I said, on this wave 4. Also, let's take a look on the S&P 500. Well, I'm bullish on the S&P 500 longer term. We are currently here, as you can see, at the 38.2%. This level could maybe actually be retested, but this will not change my my primary wave count. I know that bottom picking is not so easily, especially in this inflationary times. But if maybe Fed at some point will announce that they will be just a few more hikes and then they are done, then obviously market will see this again as the opposite policy, and we could see price stabilize here at this zone. So for now, stocks are still definitely in the risk off mode. Now, if you're looking for potential reversal and maybe even bullish case here, well, I would be waiting for 40,083 level to be overlapped to make sure that we are headed higher, or maybe you just wait on another lower low here and then a potential bounce. So I still think that during the summer this market could really give us more idea of what is going on and probably stabilizing. Now let's take a look also on dollar yen. As you know, there's Bank of Japan on Thursday, I believe. There are no change in any kind of expectations of any kind of policy here. So there will still be probably the best rate to be on the long side on yen crosses. Looking at the dollar yen first here, we are trading here into resistance. But keep in mind that there is still a very bullish trend on the longer scale. So if we would slow down in the next few weeks, I think that there will be just another corrective retracement within more upside. So since I mentioned that Bank of Japan will probably stick with the current policy, and on the other hand we have other central banks very hawkish, I think that these yen crosses could see more upside. Here we have this Aussie yen. Now Aussie yen is breaking into this fifth wave. I see more upside coming. RBI is bullish. We have China reopening. So we also have copper prices recently stabilized. So I think that there are some positive cases for the Aussie, and Aussie yen could see, in my opinion, more upside. From an Elliott wave perspective, as I said, we are in a wave 5 here. So wave 5 is a motive wave, meaning it should be structured by 5 subwaves. And if you look closely here, okay, on the lower time frame, notice that the move from May lows is still not in 5 waves. Okay, so ideally we have recently seen this extended wave 3 of 3. So more upside is what I would be looking for. You have a very nice support here around 94 level, where was this previous swing high, and also you have this mid channel of this midline of this base channel. Okay, so as long as we are trading above this lowest line of this channel, I think that this Aussie is still in a very strong bull market here. Now let's take a look also on the euro dollar. As you know, ECB is hawkish. There is expectations, they are planning more hikes in the upcoming meetings. But for now, as you know, we have the Fed on Wednesday. So obviously traders are looking away from the ECB and they are more looking and headed towards the Fed. So they are hawkish, obviously, as I said earlier, after latest inflation data, and that's why we are seeing US dollar moving very nicely to the upside. But maybe after the Fed, again, there will be a focus towards the ECB. So it will be interesting to see if this low can stay in place here till the Fed at 103.45. I still think that this could be ongoing wave 4. Wave 4 is a corrective lag, meaning it should be made by minimum 3 waves. Okay, so for now, what we see is only one leg from the lows. Then you have now this drop, meaning that the third leg, wave C, is still missing. Okay, so I'm aware here of potential more consolidation in a wave 4. I would not be looking for continuation towards new low just yet. I still think that there is a chance for more choppy price action or potentially even higher prices here into this wave C, which, as I said, could maybe come after the things will come down on Wednesday after the Fed, if the things will come down. Also, I think that dollar Swiss should be tracked very closely next week as well, or in upcoming weeks. As you know, ECB said that they will raise rates. Obviously, Bank of Switzerland could do the same. It will follow the ECB at some point. So looking here at dollar Swiss, we are seeing a very nice potential reversal. Notice that market came sharply to the downside here back in May, and now we are in this counter trend movement. I know that this is a very sharp move, but still you have this 61 and 78.6% retracement that should be very important for potential limited upside here in wave B. And as I said, if on Thursday, I think the meeting is on Thursday, CNB will somehow try to be hawkish, then I think that this market could come much lower. And if we would break this 97.20 support, then I think that more weakness could be in the cards here for wave C. And on the other hand, this could also have a positive impact on metals. Okay, so I'm seeing and I'm watching gold and silver very closely. So here we have gold making a very nice bounce on Friday. Okay, so what we are seeing here is a move now higher into this third leg of recovery. It can be a wave C, but I think that there is room for much more upside. Let me check some levels here. So here we have wave A, first leg of this three wave rise, and normally wave C will be equal or similar to distance compared to wave A after the wave B is finished. So if I project this length from end of a wave B, well, you will get these projections around 1900. So this is what I would be looking for next week. Okay, also you have this silver making quite a nice intraday rally here. So even this one suggests that we could be making a base here for a wave B, and that wave C is in the cards. Keep in mind that this whole rally from 2045 may not be start of any bull run just yet on silver or even on gold. I still think that there will be an interesting bullish run for metals at some point, especially when we look here at some big picture. Firstly, let me take a look here on monthly. Notice a very sharp rise from 2020 lows, and then you have this counter trend movement moving into very nice support. So I think that there can be a very nice bounce coming in upcoming months. But as I said, on a shorter term basis, well, there can be just another move down coming before market may stabilize. I'm looking at 20 and then even maybe 1820 as a potential support of this counter trend movement. Keep in mind that I'm tracking this wave C that should be made by 5 sub waves. And now let's take a look on Aussie. Now Aussie, firstly here, big picture, well, I see a big picture, very big potential head and shoulders formation. Notice that market came down here with 5 waves, then rallied. We broken this trend line, this trend line resistance, and looks like that this is the first leg wave A of a higher degree recovery. So more upside could be coming after this wave B setback. So we are at potential very nice support, especially if we also consider that this current pullback could be right shoulder of this head and shoulder bottom formation. So by the end of the year, I think that Aussie could be much higher. We have the bullish RBA, we have China trying to turn into this back into full economic activity. So this is something that could have a positive impact on Aussie. Also, I'm looking at this Hang Seng Index versus Aussie, and notice that we have here in red we have Aussie, while the Hang Seng Index also made a very deep pullback, but now it is trying to turn higher. So I think that this could have an impact, positive impact on Aussie, especially if Chinese stock market will do much better in upcoming months. Now let's take a look also on crude oil. Now I'm bullish on crude oil, and I'm expecting that at some point we will even retest these 2008 highs. I'm not sure if this will happen straight from here, but as long as we are trading above $90 or $100 per barrel, I think that there is a chance that this market will actually retest these highs. As you know, there is still plenty of issues in Ukraine, between Ukraine and Russia. So this is what makes this market very bullish. I know that OPEC is planning to increase July and August output, but still for now this obviously is not having any impact on the prices yet. But if maybe after summer, September, October, there will be new COVID restrictions and we will have this plenty of outputs, then maybe this could potentially limit the prices. But I'm not expecting any major changes in this trend until we potentially retest these 2008 highs, especially from an Elliott wave perspective. As you know, this was a very nice deep drop. So if this leg was completed, then it should be fully retraced. And as I said, maybe new highs could be coming. Also, looking here at closer structure of on this market, notice that I cannot count 5 waves up just yet. So this is another reason why I think that we could see 2008 highs retested. This is a first very strong recovery from that negative zone. It was extended wave 1, and then you have this wave 3, now wave 4 consolidation. So watch out for higher prices into wave 5. However, on the 4-hour chart, we have potential wedge going on here into 78.6%. So maybe this market will just chopping around for a while, trapped within these big ranges before we finally see a push to the upside. But eventually, I will be looking for higher prices. Also, if crude oil will get higher, watch out for Mexican peso. I think the dollar Mexican peso in the longer run is headed much lower. We have this very strong reversal followed by a counter trend movement into wave B. So eventually I will be looking for much lower prices, even a retracement firstly back into this pandemic low back in February 2020, and then potentially even lower levels where you have this wave 4 of 2 lesser degrees. So after the next bounce in 3 waves, I will again start to look for more weakness here on dollar Mexican peso. Now finally, let's take a look also on pound Aussie. As you know, due to recession, Bank of England, due to recession risk, Bank of England may not be that hawkish on Thursday. So this is something what we have to consider. But then you have on the opposite side a lot of central banks very hawkish, as I said earlier. Australian bank could be one of it. So watch out for these crosses. I think that pound Aussie is quite interesting. There is a very nice, firstly, this breakdown, and now you have a sideways consolidation price action. So normally this represent just a pause within downtrend. It would be, of course, a different story if the rise from the lows would be in 5 waves. So if you would have something like that from the lows. But what we have and what we are seeing right now is just ongoing consolidation. So normally this represents a very nice pause before the next breakout, and ideally we will see this 5th wave coming, which may not be far away, especially as I can already count 5 subwaves A, B, C, D, E in this wave 4. So there can be a new breakdown coming, but we need a catalyst, and maybe this will be Thursday decisions from Bank of England. We will see. Traders, thank you very much for your attention. I hope that you enjoyed this video, and talk to you next time. Bye.
Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.